It started with a whisper and ended with a roar. May 2025 was the month Bitcoin didn't just grow, it erupted. The price surged past every ceiling it had ever kissed, and with it came something far greater than market gains recognition. Governments pivoted, institutions folded. Investors who once scoffed found themselves studying candlestick charts at midnight. In the span of 4 weeks, Bitcoin went from asset to headline, from rebellion to reserve. But this wasn't hype. This was hard-earned momentum. And for those of us who have been in the trenches through the crashes, the FUD, the forks, this wasn't surprising. It was long overdue. What follows is a week-by-week breakdown of how May 2025 changed everything, and what it means for your money, your mindset, and your mission going forward. Bitcoin blows past $110,000. The first week of May was electric. As Bitcoin surged past $110,000, the entire financial world took notice. This wasn't the result of pure speculation. It was the product of global macro winds shifting, combined with years of institutional buildup finally tipping over into public view. What was once dismissed as internet money now stood as the most profitable asset of the decade. Liquidity flooded in from all sides. Spot ETFs hit record volume. Countries rebalanced portfolios. And retail, the long sidelined crowd, came back, not in a frenzy, but with a strategy. You could feel the narrative shift. Bitcoin wasn't risky anymore. Fiat was. That moment, when the world turned to Bitcoin not as a gamble, but as a lifeboat, that's when the real bull run began. Practical tip: don't chase green candles, chase clarity. Look at Bitcoin's supply issuance, its halving schedule, and its 4-year cycle. Stack with discipline, not emotion. JPMorgan capitulates. For over a decade, Jamie Dimon was Bitcoin's loudest skeptic. He called it a fraud, a Ponzi, even worthless. But in May 2025, JPMorgan made its pivot official. High net worth clients would now have access to Bitcoin products. Custody, loans, structured investments, the works. Why the sudden change? Pressure. Clients were demanding exposure. Competitors were already in, and the narrative had changed. Ignore Bitcoin and you risk losing relevance. This wasn't a love letter to decentralization. It was an admission of defeat. The very institutions that mocked Bitcoin are now racing to serve it. Practical tip: trust no custodian. Institutions offering crypto exposure are offering their version of Bitcoin, not yours. Learn how to hold your BTC in a cold wallet. If it's not in your keys, it's not in your control. America's Bitcoin pivot is a fascinating development. It signifies a shift in the financial landscape, where traditional powerhouses are now acknowledging the potential of digital currencies. This pivot could reshape economic policies and influence global markets in unprecedented ways. As the U.S. embraces Bitcoin, it's crucial to stay informed and understand the implications for both individual investors and the broader financial system. The U.S. government shocked the world in May when it began quietly accumulating BTC under the label of strategic digital assets. The move wasn't officially confirmed at first, but when a leaked report from a Senate subcommittee referenced BTC in the same sentence as oil and gold, it was clear the U.S. had entered the game. Then Texas made it official. State-level legislation passed allowing the formation of a Bitcoin reserve fund designed to hedge against federal economic policy and potential fiat instability. This wasn't symbolic, this was systemic. The message? Bitcoin is no longer a threat. It's a tool of statecraft. Practical tip: use this signal wisely. As governments accumulate Bitcoin, supply on exchanges shrinks. That's your cue to accumulate and hold like a sovereign, long term. The last time retail flooded into crypto, it was chaos. Meme coins, pyramid scams, and TikTok traders dominated the scene. But May 2025 showed something different. Yes, newcomers were back, but this time they brought hardware wallets. They understood halvings. They asked about Layer 2s, UTXOs, and self-custody. We're witnessing the rise of the educated retail investor, the sovereign stacker who's here for more than moonshots. The most encouraging part? Communities are forming around principles, not just profits. The signal is louder than the noise. Practical tip: become part of a real community, whether it's Bitcoin Twitter, a local meetup, or a group chat. Surround yourself with people who aren't just chasing pumps, but learning to build and defend their freedom. The miners' revival is upon us. After years of struggling with profitability, miners are now finding new ways to thrive. Innovations in energy efficiency and sustainable practices have transformed the landscape. Miners are no longer just securing the network. They're also contributing to a more resilient and decentralized ecosystem. It's a new era for mining, one that promises stability and growth for the entire Bitcoin network. As the price climbed, the hash rate exploded. Miners worldwide booted up dormant rigs, expanded capacity, and poured resources into energy-efficient operations. But it wasn't just about profit. Mining was becoming infrastructure, stabilizing power grids, securing blockchains, and reinvigorating rural economies. In May 2025, several U.S. cities signed agreements with mining firms to recycle surplus energy into Bitcoin production. Kazakhstan reopened regulation talks to re-attract mining firms. Even nations in Africa began exploring how Bitcoin mining could anchor renewable energy projects. Mining is no longer just validation, it's global strategy. Practical tip: learn how mining affects the macro picture. Understand difficulty adjustments, energy debates, and why hash rate matters. You don't have to mine to benefit, you just have to know what it signals. May was also the month regulation got teeth, and the industry didn't blink. Minnesota cracked down on crypto ATMs tied to fraud. The SEC issued warnings on non-compliant stablecoins. International agencies updated FATF rules, and yet Bitcoin didn't falter. It thrived. That's the lesson. When regulation clears the weeds, the strong protocols, the decentralized, censorship-resistant ones, rise. Bitcoin isn't afraid of laws, it's afraid of compromise, and so far, it hasn't made one. Practical tip: know your region's laws. Not all regulation is bad. Some can provide clarity and open the door for institutional growth, but the moment your freedom to transact is threatened, exit the system and hold your ground. May 2025 wasn't the end of Bitcoin's story. It was the end of the beginning. From here, we'll see more battles. Between banks and builders, regulators and rebels, code and corruption, Bitcoin will be co-opted, attacked, and misunderstood, again and again. But the truth is simple. Bitcoin is winning not because it's fast or flashy, but because it's resilient. It doesn't break. It adapts. It waits. It endures. And that's the kind of foundation you build a new financial era on. Final practical tip: stop thinking in price. Start thinking in blocks, in eras, in cycles. If you zoom out far enough, the line only goes one direction, and it's not measured in dollars, it's measured in freedom.